Good morning, folks. It is just before 9 o'clock in the morning on December the 18th, 2020. It's Friday. Happy expiration day. We're going to go ahead and take a look at our trades from yesterday. Okay, so we got off our bull put spread in gold for December the 31st expiration, which is great. We are very quickly closing all of our 2020 spreads. So as we come up with 13 days left in the year, we're getting that risk off, and our year-end tax picture is very quickly coming into view. Okay, and then we got off our January 15th. So we had a 4 cents on that credit that we wanted to buy it back, or a 4-cent debit we wanted to buy this spread back for. And then we also got on an SQQQ bear call spread, and we'll take a look at that. We got $1.10 worth of credit, 6 spreads on that. First, let's go into gold. What I'm going to do is I'm just going to go ahead and bring up really all of the trades. That way you can really see kind of the trade, exactly when we got in, why we got in, and how long we held these positions for. So let's just go back. Let's try 45 days. 11.4, perfect. Okay, so here in this first position, we got in on 11.4, so we held this for a month and 13 days. 11.4, we sold for 30 cents worth of credit, so we got 22 cents worth of credit on 6 spreads. Yeah, you know, I'm fine with that. Now, the reason that we did this was because we wanted to open this trade, right, and essentially the furthest out weekly. But we ended up just grabbing a couple of extra days. Our compounding table was the furthest out weekly at the time, which would have been the 24th, because of course we're off next Friday for Christmas. And we went 20 delta for the short spread, and so 20 delta here. We actually got, let's just go to the charts. We actually got really decently close, as my computer decides it wants to take forever to, there we go. Okay, so gold, so we're gapping up again. Gold really decided, right, that it wanted to get really close to this bottom here. Now it says 165.86. If we actually were to go though into the futures, you would see that we were a little bit closer to hitting this short strike, this 165 on this day. You know, we got in, when did we get in? 11.4. So we got in on this day right here at 178, and then we lost, you know, $13 through that trade. And you know, had we hit 165, of course we were going to roll out, but thankfully we hit, right, RSI right there, we hit, and then we were able to really realize the gains on the way back, which was really exciting, right? And we were able to get out after being challenged a couple of weeks ago. We were able to get out yesterday for that trade. Now on the same day, right, so let's go here, 11, what is this, 30, 11.27. So on 11.27, so we almost nailed the bottom here on gold. So we put on another spread, 20 delta again for January here on this candle, right? So we thought, okay, we are getting into oversold territory here. Let's go ahead and see if we can't put on another bull spread a little bit further out in expiration, and that's exactly what we did here. And so we did that, and then we were able to realize less holding time. Essentially though, what was this? We put it on for 26 cents worth of credit, 5 spreads, took it off for 4 yesterday. So what did we get? We got 22 here, we got 22 here, so we collected 22 cents per spread on both of these positions. And you know, we just had 6 credits here on one, 5 credits here on the other. And so that's the primary difference for us here, is that just one additional credit here, 6 and 5 for us. Okay, so we were able to get those out for our profit targets there in gold yesterday, so that was really exciting. Okay, let's go into the SQQQ trade. 6 spreads, got 2 different fills, $1.10 worth of credit. So let's go to SQQQ and let's talk about why we got into this trade. All right, so SQQQ, as you can see, it is a really just a long destroyer. We've had really one major spike, of course, February and March of this year, where we went from 77 to 162, so just over 100%, right, on this particular trade. However, you go out to the 5-year chart, and you can just see, right, $2,000 on this particular spread, or on this particular security, and we just see, because it's an inverse 3-buy ETF, there's natural decay in this particular position. So that's what we're going to play. We're going to play this type of decay, and we're going to hopefully see continued decay really until February, right? So this is a February expiration, right? So we go to SQQQ. 63 days left of decay to really just kind of play in our favor. So that's what we're going to do. We're just going to watch this. We've got the buyback at, I think, 52 cents. So we brought in $1.10 worth of credit. We've got the buyback at 52 cents. That way, we potentially mitigate runs like this, right? Where we see a 50% run. Okay. No, that's more like 25% there. But when we see something like this, right? So had we put this position on here, and we try to get out before we get into that situation. Now, what we are going to do here, right, is we are always going to take the low, right, the most recent low, and we are going to add a 25% increase, and then, so this position is 1% net lick, right, 1% per week net lick, and all of our different securities and our leveraged ETFs. That's the goal, 1% net lick per week. Now, if we get a 25% move from here on any of our 3 buys, right? So whether that's Lab D, which is looking great, whether it's Lab D, which is our biotech, SOXS, which is our semiconductor. Anytime we get that 25%. SPXU, right, which again, really nice here, really nice decay over the last couple of months here, and really always, and UVXY, right, so if we get those 10% or 20% jumps, we're going to add positions here. Okay, we're going to add positions. Otherwise, 1% net lick per week rotating through these securities in order to allow us to continue to just realize this decay and continue to collect premium and have these risk defined but really outsized gains. Okay, so that's where we're at. SQQQ was the opening trade. That's why we put it on right here. Yesterday, I think short strike is at 16, and so we have our short strike at 16, and so we're just going to continue to watch it. RNA need a 3% correction here in this, which would equate to a 1% correction over the long haul. And really, it's more than that, right? It's more than that due to the leverage nature of the ETF. In the Qs, and so of course this is a Q inverse. We are gapping up just a little bit here in the Qs, so we're just going to watch, see what happens, and just continue to move forward and continue to take in these premiums and these credits, manage positions early, get them off early, and continue to grow this net lick. All right, if you have any questions, please feel free to reach out to me at Ryan, RYAN, @sellthatoption.com. Otherwise, happy trading.